Okay, it is 8/8/2024. Just going to do a quick recording on kind of a review for what I did for the day and a little lesson. Um, just going over a little bit of what I did this morning. I thought the gap might hold this morning, and versus the other times that we've gapped up, a couple things have happened. Um, yes, we came in and we got this liquidity shock. We got the hit down, and we got a couple days of actual buying, and then yesterday it gapped up and just sold off all day. But there's still buyers here, right? And yesterday I said, hey guys, I'm not really too concerned about this sell off because we're still finishing above this group of people, and as long as we do that, we're fine. Well, we actually got good news today that kind of counteracts the bad jobs report we got last time. So it's much easier for the SPY or any company to hold a gap if it's actually gapping up for a reason besides, hey, we just bought overnight futures. So this was a news-based gap up. And so for me, what I was looking at was I was trying to play zero DTE options. And in the beginning, it's just like kind of churning sideways, and it's like, it's not giving us a direction. And then it broke down, and I said, hey, let's look for a failed breakout. If it's going to shoot up, right? If it's going to hold the gap, I think we're going to start seeing that here. If we start coming over lower, you're probably going to fill the gap. Well, sure enough, there's your failed breakout, and then there's your rip for the rest of the day. So there's a lot of opportunities in this 5-10 minutes that you could have gotten long, and you just have to understand your thesis and why. And the target for me was 530, and we hit it. And when you can do things like this, I literally, my high sell was 300%. I got 300% out of the zero DTE options. And they're fun to trade, but when they don't work, you can lose 75% of your option pretty quickly. So you need to try to get at least doubles out of them. The other thing that I did today was I loaded into some longer term options. I bought AMD, Amazon, BITO, Microsoft, NVIDIA, and SPY. Now, the reason I'm doing this is because I do think we're at a bounce level. I think we bounced kind of in through August, and then maybe next month we come over and retest these levels. Maybe it happens sooner. I don't know. But I do think we're in a bounce area. And I want to be a partaker in it. I went back and did Sorry, Charlie's talking in my ear. I went back and checked how many times this has happened in the past, like 20, 30 years. I think 10 out of 12 times when the VIX has shot up as much as it did and we shot down, you've come back and done a double bottom, right? So when you go back and you look, it's like, all right, well, did it just create a V? So do you guys see how this created a V right here? It was like boom, boom. That's much rarer. And so is that going to happen here? I don't know. But if it does, I want to be in it. And if it doesn't, I'll be able to scalp some out and then add on the pullback. Remember the PowerPoint presentation from the beginning of this week. We are, in my mind, we are not anywhere close to a recession. The economies around the world are doing fine, and we're about to get liquidity flushed into our global money supply, global economy, as the dollar weakens. Okay, can I repeat? Yeah, so today I bought AMD, Amazon, BITO, this one, Microsoft, NVIDIA, and SPY. Yesterday I bought IWM, or the day before, like I think 2 days before I bought IWM. Some GNRC longer term. But anyway, the point is, I think we're going to continue to get a little bounce. But when push comes to shove, I'm setting everything up for a year-end rally. Right now, that's what I'm doing. This is all for a year-end rally. And now I'm going to show you kind of why I'm doing that here. Again, I was raised in Alabama, right? So me not speak it so well sometimes. So I wrote everything down so that you guys can read this. The majority of what I bought was actually options today. It was longer term options. Let me show you guys something too. That's why you can't understand me. That's right. So look at some of the buys today, right? So you got ARM. Somebody's buying. Remember when we watched ARMs, people piling into ARM, and we nailed that trade at the beginning of the year? They're doing it again. So ARM, 11 million, 2026, 10 million, 2026. PayPal. Somebody's been buying 5.3 million of PayPal over the last few days. Microsoft 5.3, Amazon 5.3, right? 2026, 2026, 2026, 2026, 2026. So that's just today. And then if you go back and you look at yesterday, and this is what I tell you, like this is how I like to see longer term options being bought. So yesterday you can see 47 million in ARM, right? Options were bought. I mean, it's just crazy. 11, 10, 7. And then Amazon, 5.2 million, 1.1 million, right? Anyway, you go through this and they're all for 2026, right? They're all buying out to 2026. Everybody's getting these 2 mil, 3 mil, 5 mil. So here's 15 mil basically on PayPal that's out till 2026. Microsoft 11 mil. So just in the last 2 days, look how much money has been bought. So if you go to this week, check out all these humongous orders on ARM: 11.9, 10, 7.9, 1.1, 3.3, 7, 5, 8, 5, 3.9, 7.3, 7.4, 6.3. I mean, somebody's loading the freaking boat here, right? Like, they're all in. They are a believer in ARM. And I could go through and I could show you the same thing on a lot of these, like Amazon. Somebody's been buying 5 million lots. PayPal, same thing. Microsoft, same thing. Now, does that mean that we're going to go up from here and there's going to be no hiccups? No, not at all. But it does mean that big money is getting put to work on longer term plays. Okay. Okay. So, before I start getting into this of what I'm going to talk about, back in I think it was April, I did one of these weekly data dumps for you guys, and I shared an article that talked about how the Bank of Japan just changed the game. I told you guys this. It was either March or April. I think it was April. But what I said was, hey, with Japan starting to raise rates, that's going to change the game. So does everybody understand what has happened and what caused this spook in the market? Does anybody not understand that? Because I've explained it like 20 times, but if you aren't here or you don't understand it, I can do it again. So does everybody know what caused the spook? D-Man, can you put up the first flow diagram? Are you talking about this one? This one's the one for the week. So you can see if you want to screenshot this one. This is ARM. Well, here, for you guys that don't understand what happened, I'll share the article that I shared back in March or April. So for you guys that don't, if you don't have Barron's, maybe I could just snip this out for you, but this is an article that you can read that explains it really well. But basically what's happening is big financial institutions were going to Japan and they were saying, hey, let me borrow 10 billion of your currency, which has an interest rate of 0 and at sometimes negative. And then I'm going to change your currency into what? Dollars, so that I can invest in Nvidia, or I can buy a bond that gives me 5%. And the difference in the yields is free money, right? It's literally you're borrowing from one and paying no interest. You're investing it in something else and you're getting a guaranteed whatever 3, 4, 5% interest, and so you're making free money. So borrow as much money as you can. Well, when global liquidity begins to tighten, it becomes a problem for the entire world, right? And when the Bank of Japan raised rates, you actually change the risk profiles for a lot of banks, a lot of big institutions. And so they have to start closing their position. And what that means is they have to take their dollars, so whatever they're invested in, sell it, get their dollars, go back to Japan, right? Transfer it into their currency, and then pay back the loan. Does that make sense? Okay. So that's what was spooking everybody out. Everybody's like, well, shoot, Japan's not providing as much liquidity. Japan would give out tons of dollars because people would go there and they would borrow money and then they would go back and invest it in higher, riskier assets like Bitcoin, the Qs, Nvidia. Yeah, exactly, Brooke. Haven't we all done that at some shape, form, or fashion? It's like, oh, I get a 0% interest on this credit card for the next. I remember doing that when I was like in college. It's like if you transfer your balance over, then 0% interest, and you know what I mean. And it's like, oh, great, free money, let's do it. So we've all done it, but this is just on a big global scale. All right, I'm gonna try to get through this as clearly as possible. So, what the world, and including Fed Chair Powell, wanted after inflation and COVID and everybody creating all this stuff was to bring down the demand. And with lower demand, you get lower production. And so everybody had so much inventory, they didn't need to produce as much. And so ISM has been slow, right? Below 50. And so we need something to stimulate that. Does that make sense? Does anybody not understand that? So in order to stimulate, what do you have to do? You have to do the opposite of tightening, which is cut rates, right? Stop rolling off the balance sheet, et cetera, et cetera. Well, when you're talking about a global scale, a strong dollar creates extremely tight financial conditions. And so for the global scale, You want the dollar to start to weaken. Can anybody explain why that is? Why does a weaker dollar bring global strength, global growth, global liquidity? Does anybody know? Yeah, more exports for who? Yeah, it helps global trade, right? Um, and the USA can uh, how do you say this? The people that were invested in the USA and the currency within the USA, as that starts getting weaker compared to other currencies, right? Then all of a sudden the demand for the dollar goes down. And what goes up? So if the demand for the dollar is going down, what else are these people buying instead of the dollar? They're going to be buying they're going to be buying other currencies that are becoming more valuable comparative to the dollar so that they can buy the goods within that country or whatever. Does that make sense? So again, this is my conspiracy. You ready? So in 2016, we had a similar problem where we had a strong dollar. The global economy was struggling, and we needed to ingest liquidity into it. And so Japan came to the rescue then as well, and they became the liquidity provider. And maybe I'm skipping ahead here, but what I think is I think they're trying to run that same playbook again now. So when Yellen went to China and talked to them, what does China need to do to get their economy going? They need to stimulate the economy right here. China needs to stimulate, right? So what would be the best time to stimulate the economy? When the dollar is stronger compared to their currency, or when the dollar is weaker compared to their currency? So like if right now I could get 100 of their currency for a dollar, or I could get two for their currency for a dollar, when would it be better to stimulate? It would be better to stimulate when the dollar is actually weaker, right? So, in order for China to stimulate, they need the dollar to be weakened. And so, Yellen says, all right, we will cut rates, we will start the cutting process, but we need to weaken the dollar first. Who can do that for us? Japan can. Japan can start tightening, shrinking the carry trade, decreasing the demand for the dollar, increasing the demand for other things such as the yuan, the yen, etc., etc. And that way we can actually stimulate in China and create this bazooka stimulus. And so, if you guys remember at the beginning of the year, I told you guys once rate cuts start happening, China's going through the roof. I didn't know when rate cuts were coming. It's taken all freaking year, and it's been kind of annoying, right? But it's going to happen now. We actually see we see it coming. And so what's going to happen is once we start to cut rates and the dollar starts to weaken, China will be able to stimulate more. And it helps because it improves trade balance by making imports more expensive and exports more attractive. And it leads to increased liquidity within the country. This leads to outflows of capital toward the weakened dollar. And so what's going to happen is people in China are going to be able to make some more money, make some profits, and they're going to be like, well, shoot, if Microsoft, I'm just gonna put this number out there. If Microsoft is at 400 right now, 400 US dollars, okay? And right now, here, maybe I need to write this out. So Microsoft, let me change the color here. Microsoft is at $400. Okay, that's the price of it. So if right now, again, I'm going to make this up just to make it a little over the top so that you can understand it. So let's just pretend that for every, I don't know, let's say for every, let's go a dollar. Let's just make it a dollar. So for the US dollar, let's say if we got $1 US, and that equals, I don't know, let's do 100 of their currency, right? So if I wanted to buy one share of Microsoft with my Chinese money, how much would I have to pay of my Chinese money right now? If this was the exchange. Yeah, you just add the two zeros, right? And so what happens if all of a sudden the dollar weakens so much that now the yuan is worth 10? How much would it cost you then? Instead of 40 thou, you only have to spend 4. So you can buy one share of Microsoft at 1/10 the price, even though the cost of Microsoft hasn't changed at all. Does that make sense? Is everybody grasping this? Even though the price of Microsoft hasn't changed at all. They're like, oh, shoot, I can buy Microsoft now at 1/10 the price I could get it, 6 months ago? Shoot, yeah. Right? And so this is how important it is to understand the relationship between currencies. So as a weakened dollar can make Chinese assets more attractive to foreign investors, and as the investors think the yuan will continue to appreciate in the future, if they do think it will continue to appreciate in the future, and then what's going to happen is as Japan raises rates and continues to close the carry trades and people continue to liquidate that position because they're becoming less profitable, the global lending of dollars comes out of Japan. Japan's not lending dollars near as much as they were, so that weakens the demand. Right now, or what was happening, the world is getting squeezed, right, on the dollar, and they need to decrease the demand for the dollar and increase the demand for the yen. So this begins the weakening of the dollar, and the carry trade, people borrowed, like what we talked about, and as Japan raises its rates, it makes these much less profitable. They begin to sell their dollar to pay back the That should be the yen. There you go. In order to pay back the loans they bought for the carry trade. This is what brought down the Qs and the riskier trades like Bitcoin. Now that the risk is back to an acceptable level, now let's see if we can find a balance. So like everybody that has risky assets, they have what's called risk equations. And as those equations get changed, you have to liquidate. And that's what happened, right? You have to liquidate to make sure your risk is under control. So now that the risk is back into an acceptable level, what we've got is an injection of liquidity into the global markets. Now, all the markets moved down together. All that was happening is the swapping of currency and the reducing of risk. That's it. Did anything change fundamentally about Microsoft's earnings? Baba's earnings? Did anything change about Nvidia's earnings? No, nothing changed. We are not set up for a recession right now. Everything's growing. We're on an expansion cycle right now. But what happened is you got What happened is you got the liquidity squeeze, right? Now, what I want to show you is back in 2016, Japan weakened the dollar, flush of liquidity came into global markets, and we started a new bull run. Let me show you what happened to Baba after 2016. You guys see this? So it went from 60 to 320 and had a 450% return. Well, guess what? We are 10x in profits from here. We are 10x in revenue from here. We are 10x in everything that is important. So our company is 10 times better than it was here. Right now, this company is 10 times better than it was here. And this is what happened back then. Right? And so what's going to start happening, and I've told you this for a long time, I know, probably sick of hearing it, but it's finally happening. I couldn't tell you when they're going to cut rates. If I could, I'd have been like, let's just wait and blah, blah. No, I can't. I've learned trying to time things exactly makes you miss a lot. I buy when value is there. And I'll scalp in and out to lower my cost basis, but I buy when value's there. Baba is going to start getting some love. So let me show you what that article... Where is... There it is. So this Barron's article goes through and it tells you, hey, here's what happens with the carry trade. Here is the carry trade dead, blah, blah. Well, they ask, hey, are there any winners? China has a lot to gain if the Bank of Japan continues to raise interest rates, thereby strengthening the yen. China and Japan both rely heavily on exports of things like electronics, cars for economic growth. The stronger yen compared to the yuan will make Chinese goods more attractively priced. Yes, please. Check. Check. Yes, please. Right? So, if what I'm telling you here is, number one, we're not in a recession. Don't freak out. Think long term. We're going to bounce from here. And start, if you can, start getting long-term positions. Number two, we may roll over and test the lows again, and we may even break the lows of what we set on whatever day this was, the 5th. I would expect that to come a little bit later, like maybe in September. But it may happen sooner. But if it does, it doesn't change my thesis at all. So instead of thinking, oh crap, it's going, the market's red, think, I'm going on sale to the thrift store to pick up some Microsoft and some Apple and some Nvidia and whatever other company you love for cheaper than it was last week or the week before or last month, right? And get excited about the pullback, because that was the theme of this year. Learn to love the pain. Because guys, just in case, well, here's another graph I wanted to show you. This is the global market, right? Liquidity index. So do you see how we kind of are flagging out here and we shot up here? The same thing's going to happen right here. I don't know if you can see this, but boom, 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 and that money is going to start flowing in, and it's not only going to flow into China, it's going to flow into America as well. It's going to help the world and global economy, and it's going to increase manufacturing, and it's going to help all parties involved instead of just 7 stocks, right? Instead of just the Magnificent Seven. So are you totally discounting the possibility of China invading Taipei? You mean, is that Taiwan? I don't make decisions, JB, off of global possibilities of things that I don't know. So for example, when the Ukraine war started, it doesn't change my thesis that much. Maybe we should move some money into some defense, people that are supplying missiles or something like that. But, I don't think China's going to do something that would totally collapse their economy, which that's exactly what would happen if they invaded Taiwan. Now, will they? Maybe, and I'll deal with the repercussions then. So that is a risk that you take, but I don't think they will. I don't think they're that dumb. I think China's been around for a long time, and they know better than to do that. So anyway, yeah, this chart shows you right here. 10+% pullbacks occur 1 time per year. 5% pullbacks occur more than 3 times a year on average. So what did we just have? I think it was 8%. Is that what we had? What was this pullback? I guess almost 10, 9.8. So this is common to happen in any year. It happens once a year, at least, right? So again, number 1, we're not going to go into a recession anytime soon. Number 2, we may get a retest to create a W on these indexes. If it happens, I'm buying more. Number 3, as the dollar starts to weaken, and it will, Japan will continue to weaken the dollar, which would make other currencies more attractive and emerging markets more attractive, and so people will start flowing money into emerging markets, and then the circular effect from that is these emerging markets start to get profitable, and those people there become more profitable, and guess what they do? They reinvest it back into our economy as well, because now they can buy Microsoft at 400 for only 4 won instead of 40,000, and so that's what's going to be happening over the next 6 months to a year, in my opinion. Is there any questions on this?